Ever wonder how your credit score is calculated or why it sometimes feels like a secret number that controls your entire financial life? Welcome to Stix Cents. Today we're diving into credit scores, what really affects them, how to fix yours, and the latest 2025 updates that could change everything. Let's break it down, stick figure style. First off, what even is a credit score? In the US, your credit score is a 3-digit number, usually between 300 and 850, that tells lenders how risky it is to lend you money. Higher score, lower risk. Lower score, you might struggle to get a loan or pay higher interest. Think of it like a trust meter for your financial behavior. Now, who makes up these numbers? The most common model is the FICO score, created by the Fair Isaac Corporation. There's also Vantage Score, a newer model used by some lenders. Each has slightly different formulas, but the core principles are similar. Here are the 5 main factors that make up your FICO score. First, payment history, 35%. Have you paid your bills on time? Even one missed payment can drop your score. Second, credit utilization, 30%. This is how much of your available credit you're using. Ideally, keep it below 30%. So if you have a $10,000 credit limit, don't carry more than $3,000 in balance. Third, length of credit history, 15%. How long you've had your accounts. Older accounts equals more data equals better score. Fourth, credit mix, 10%. A healthy mix of credit cards, loans, and other accounts shows you can handle various types of credit responsibly. Fifth, new credit inquiries, 10%. Every time you apply for credit, it results in a hard inquiry. Too many in a short period can hurt your score. Now let's talk about what's new in 2025. Big win for consumers. In 2025, new federal rules prohibit credit bureaus from including most medical debt on credit reports. That's right. If you've had a medical bill haunting your score, it might be gone. Why does this matter? Because medical debt is often unexpected, and many people don't even know it's on their report until they apply for a loan. Under the new rules, medical collections under $500 were already being removed. But now, most medical debt will vanish entirely from reports. This change alone could boost the credit scores of millions of Americans. Also in 2025, the government is increasing oversight on fraudulent credit repair companies. Some of these companies promise to fix your score fast, but they often charge high fees and deliver little. Under new protections, they'll be required to disclose your legal rights, avoid deceptive tactics, and provide actual results before taking payment. So if you're thinking of hiring someone to fix your credit, do your homework. Now, let's bust a few common credit score myths. Myth number 1, checking your own credit score hurts it. False. That's a soft inquiry and it doesn't affect your score. Myth number 2, closing old accounts helps your credit. False. This can actually shorten your credit history and raise your utilization rate. Myth number 3, paying off a collections account erases it. Not necessarily. It might still show as a paid collection, but it doesn't disappear. That said, some newer scoring models like FICO 9 and Vantage Score 4.0 ignore paid collections, which is good news. So, how can you actually improve your credit score? Here are 6 simple strategies. 1. Pay your bills on time, every time. Even one late payment can tank your score. 2. Lower your credit utilization. Pay off debt or ask for a credit limit increase, but don't spend more. 3. Keep old accounts open. Even if you don't use that card from college, it's helping your average credit age. 4th, limit new applications. Only apply for credit when you need it. 5. Diversify your credit. If you only have one credit card, consider a small installment loan, like a credit builder loan. 6. Check your credit reports for errors. Visit annualcreditreport.com and dispute any mistakes. They're more common than you think. Remember, improving your credit score is a long game, not a quick fix. But the impact on your financial life is massive. Better loans, lower interest, higher limits. Let's talk numbers. Say you have a 580 credit score. You apply for a car loan and the interest rate you get is 15%. But someone with a 750 score might get the same loan at 4%. That's the difference between paying thousands in interest or keeping it in your pocket. So, what's a good credit score? 300 to 579 poor, 580 to 669 fair, 670 to 739 good, 740 to 799 very good, 800 to 850 excellent. If you're not in the excellent range yet, don't worry. Most people improve over time by building good habits. And with the new 2025 rules, you might even get a surprise boost. Let's recap. Your credit score is built on 5 key pillars: payment history, credit usage, length of history, credit mix, new inquiries, and in 2025, most medical debt is being removed from reports. Scammy credit repair companies are under new restrictions. More consumers are being empowered to take control of their financial future. And guess what? You don't need to be rich to have a great score. You just need consistency and information, like what you're getting right here on Stix Cents. If this helped demystify credit scores for you, drop a like, hit subscribe, and comment with your biggest credit score question. We might answer it in the next video. Until then, stay sketchy, stay smart.